Today, we are diving into a really incredible story of financial transformation, all coming out of East Africa. We're going to look at how Kenya's entire banking sector basically leapfrogged decades of development to become a world leader in digital finance. And honestly, it's a story that has lessons for all of us.
And it all really boils down to this one powerful question. How did a simple cell phone, something most of us take for granted, completely redefine an entire nation's economy? The answer is just fascinating. It shows how innovation, born out of necessity, can absolutely change the game.
So, where did this whole revolution even start? Well, it all ignited from a single spark: mobile money. And look, this wasn't just some new app or trend. This was the catalyst, the thing that set off a chain reaction, forcing an entire industry to either reinvent itself or get left in the dust.
To really get this, you have to understand a service called M-Pesa. We're not talking about just tapping your card for coffee. I want you to imagine paying your rent, buying groceries from a stall at the market, even getting your salary, all through a basic text message on a simple phone. That's the power of M-Pesa. It just worked for everyone, everywhere. And it put Kenya on the map, setting the stage for a massive, massive disruption.
And that disruption? Well, it kicked off the first huge ripple effect, a full-on digital banking arms race. As mobile money just exploded in popularity, the traditional, kind of slow-moving banks were caught completely flat-footed. They had to innovate, and believe me, they had to do it fast.
So what you had was this classic standoff. On one side, you've got the big, established banks, physical buildings, 9 to 5 hours, lots of paperwork. But then, on the other side, this new wave of companies called Fintechs popped up. They were digital from the ground up, open 24/7, and incredibly nimble, creating all these cool niche products that the big banks were totally ignoring.
So what happened next was this really smart pivot. The banks basically realized, hey, we can't beat these guys at their own game. So the classic, if you can't beat them, join them strategy came into play. They started partnering with these fintechs, even buying them outright. And at the same time, they started pouring tons of money into building their own digital tech, using things like AI and data to finally understand their customers better.
But this whole digital shift had an even bigger impact, a second, really powerful ripple that actually started to change society itself. It began to bring banking to everyone, especially the millions of people who had been completely left out of the financial system. This is where the story gets really good.
And the key to this was a genius idea called agent banking. So think about it like this. Instead of building a huge, expensive bank branch, a bank just partners with a local shopkeeper or a small business owner. It's someone everyone in the community already knows and trusts. That person's shop becomes a mini bank where you can deposit cash, withdraw money, and pay bills right in your own neighborhood.
And this wasn't just about making things a little easier for people in the city. No, this was a complete revolution for rural Kenya. Agent banking, which was powered by that exact same mobile tech, became the bridge that connected millions of previously unbanked people to the formal economy for the very first time.
This also led to a really smart rethinking of what a bank branch even needs to be. Banks started optimizing. They cut back on those huge, expensive buildings and instead put their money into these smaller, more efficient agent locations in digital spots. The few big branches that are left, they've been transformed into hubs for more complex stuff, like getting a mortgage or a big business loan.
So this whole journey has created a brand new banking landscape in Kenya. And with it comes a whole new set of challenges and opportunities. So that brings us to the question, what does it actually take to be a future-proof bank in this new digital world? Well, the challenges today are way more complex. For one thing, with everything being digital, cybersecurity is, of course, priority number one. Banks are constantly investing to protect customer data. They're also getting super smart with data analytics to create personalized services. And now there's this growing focus on sustainability, with a new wave of green banking to fund eco-friendly projects.
Of course, none of this just happens in a vacuum. You've got regulators who are doing this delicate balancing act, constantly updating the rules to protect consumers and keep the system stable, all without accidentally crushing the innovation that started this whole thing. It's a tough job.
So what's the big takeaway here? Kenya's story is so much more than a banking case study. It's really a powerful blueprint for how technology can tear down old barriers and build a more inclusive, more dynamic economy from the ground up. It really makes you wonder, what can the rest of the world learn from their example?